With house prices falling, unemployment figures rising and the banks in turmoil, we are no longer in a credit crunch, so to speak, but we have entered a recession, and Europe is entering a recession, and the whole of the worldwide economies are in turmoil. Unfortunately, unemployment and redundancies are a factor of recession. If your employer is facing difficulties in their business, then unfortunately you as an employee will be targeted in this respect. If your employer is wanting to reduce your hours, they will discuss this with you. If you are happy for a reduction in your hours to keep your job at that institution and perhaps to increase them in the future when times improve, then this is something for you to consider. You must consider this carefully, as it could, in certain instances, if you won't reduce your hours, lead to you being made redundant. There are some financial products which are very useful at this time when we are heading into recession and being concerned about unemployment. One of these that you might like to look at is income payment protection, which will protect your income in the circumstances of perhaps being made redundant or being unable to work through ill health. There are various policies on the market which you can look at. You must be aware, however, that you cannot take out these policies on knowing that you are surely to be made redundant. It won't work in these instances, and you must have been paying into the policy for a certain amount of time before you can claim on it. But it is something that people are looking at, payment protection insurance, mortgage protection insurance, to perhaps protect them if, unfortunately, they may be made redundant as a factor of the credit crunch and the recession. If you've got savings in the UK, then your savings are protected for £50,000 per institution per person. Now, you must bear in mind the two elements of that. You've got £50,000 protected per institution per person. So joint bank accounts will receive the full 100,000 per institution. So it doesn't matter how many accounts you have. If you have 3 accounts with £50,000 in, you're only protected for £50,000, not the 150. And it's also per institution. Now, some banks are associated with one another, such as Halifax, Bank of Scotland, HBOS and Birmingham Midshires, etc. Full information of which banks make up an institution are available on the Financial Services website. You should check that out. Now, generally, if you were 2 months in arrears with your mortgage, then the bank would pass this to their debt collection department, and they would contact you to try and arrange some different payment plan. If 6 months have passed since you stopped paying your mortgage, so you've got 6 months of arrears, then your mortgage lender can issue a court action for repossession of your home. A summons will be issued, and this will generally be in around a month's time. The lender will put forward a claim for possession. If you can still demonstrate that you can pay your mortgage in some respect, it may be lesser ability to pay than what you were paying previously. You might have to pay £100 less, £200 less. If you can still demonstrate you are able to pay at least something, some substantial amounts, then the court will generally issue a suspended possession order stating the new amounts which you are to pay under your mortgage. As long as you abide by this, then your mortgage lender will be prevented from repossessing your home. With With major banks like RBS being bailed out by the government, is it legal that huge bonuses are being or could be paid to executives of that bank? Well, as I've said, it is quite a sketchy area, this. At board level, the government has stopped this. In relation to below board level, it depends on how the government has acquired the shares in the bank. If it's preference shares, there will be a halt on paying bonuses until the preference shares have been redeemed. If it's by ordinary shares, then they are open to pay these bonuses. If they want to pay bonuses before they receive the money from the government, then of course they can do this. But if they don't pay the bonuses, then the bank's employees could pursue the bank for the bonuses if they are contractual. And even if they're not contractual, if there's been a history of them, there's various cases on this. So unfortunately, it looks as though the taxpayers' money could be used to pay bonuses. I know previously bonuses have wiped out a lot of the profit that any bank has made, but the banks are stating that they do need to pay the bonuses to keep their best members of staff so that in the future they can improve and get fighting fit again. Does the £50,000 compensation limit apply to business bank accounts or just personal accounts? As far as I am aware, it is just personal accounts. So it's £50,000 per person per institution. For business bank accounts, I don't think that applies. You will have to check with, I'm sure you'll be able to look on the FSA website, but also check perhaps with your business banking manager and the bank that you are banking at. Unfortunately, it's more difficult for businesses to spread their risk and put their money in different accounts. You might want to speak to your accountant or tax advisor in that respect.